Hello everyone. I'm going to introduce a new indicator that is the volume based indicator, and everybody use this type of volume, and this volume is basically the volume by time. So whatever the time frame you choose and whatever the volume it will print during that time period, when the next candle will start, the next volume candle will start. So it is not because of like a specific number of volume has reached and then automatically shift to the next bar. It's not going to happen like this, because this is the volume by time. And other concept is called volume at price. To understand the volume at price, first you have to understand the standard deviation. So look here, this is the 0 point, so there is a 34.1% chance that the market can go one standard deviation on this side, or there is a 34.1% chance that the market can go above this price, like +1, and this is -1. So this in combined is 68.2%. So which means there is a 68.2% chance that the market will remain within one standard deviation. And then we have the 13.6% chance and 13.6% chance. So it means what? 27 point something. So it is the 26 point something. We have the chance that the market can go up to 2 standard deviation, and then the 3 standard deviation, it is very little. Okay, so what is the volume at price? The volume at price is basically every day there is the 68% of the volume where it trades. We call that area is a value area, and then remaining 30% of the volume is outside of that deviation. So we don't count them, because we call value area where 70% or 68.2% volume actually traded. So we use this with different ways. So for example, first let me explain that this concept come from who. This concept I am inspired by Market Webs, and he is the original founder of this concept, and I have been using this concept for so long time, and I have been using this, so I decided to create my own. And in this case, you can check this one. You can go and search Market Webs, and you can check that how they are working. Okay, so what actually we have the different time frames. So for example, we have the weekly time frame. So on the weekly time frame, let it load. So you see that on the weekly time frame, this is the January 2nd until December 30. So this is the 1 year value area. So value area high, value area low, and point of control. So this value area is 70% volume was traded into this zone, but when? Last year. So last year is from here to here. So it is plotting last year's value area into next year. So it means when the first candle was opened until the last candle, these values will never change. These values will be static. Why? Because these values are coming from the previous 1 year volume. Okay, And if you go on the weekly time frame, you can see the last year value area. But if you go on the daily time frame, this is for the monthly. So the month started on 1st August and is going to end on 30th August. So it means this value area high, low, and point of control, these three values are coming from this date to this date. You understand? This is the last month. So last month's values are being plotted for this month. So they work as the support or resistance. Why? Because 70% of the volume is traded into this price. And the most important is point of control, where the most volume during this whole period was traded. So 496.24 is the highest volume ledge for this month. So we will use this one. Whenever the price will go there, we are looking for a sell. And similarly, if you see that, for example, we cross this one, then this volume, this point of control turned into spot, because this volume, this point of control actually coming from this month. Okay, and if the price comes down just like this, the value area high is working as a spot. Okay, and we will check this how to use this one correctly, but first we understand. So we are using the weekly time frame for the yearly and daily time frame for the monthly, and then we go to the 1 hour time frame. On the 1 hour time frame, we are using the weekly value area. So what does it mean? It means last week the price is from here to here. So last week's 70% of the volume was traded into this zone. And in this zone, we have the point of control, value area low and value area high. So if the price comes down, this is the first area where we are looking for a spot. Otherwise, this is the highest volume ledge where we are looking for the spot. Just like this one, if the price comes at the value area low, we are looking for buy. And if we are going at the point of control from here to here, we are looking for sell. And of course we will look for the confirmation entry model. And I'm showing just the QQQ, the ETF, but we can use it on every underlying, even the forex or the commodities, everywhere. I don't know on Bitcoin. We will check this one on Bitcoin as well if it is working. Otherwise, I will work on it later on to work it on Bitcoin as well. So you see that this is the value area high, and the price exactly rejected from the value area high. So this is my area of interest to sell. And so on the 1 hour time frame, what we are looking for, the weekly. So let me write here. So it means weekly time frame is showing the yearly, and daily time frame is showing the monthly, and hourly time frame is showing the weekly, and M15 time frame will show the daily. So let's go on the 15. So we will use only these 4 time frames for this purpose. So in this case, this volume area is 70% of the previous day where the volume was traded. So you see that throughout the day the price was getting spot from this area. Okay, and similarly this is the value area from this day, from here to here. Okay, and then there are few lines like this one, like this one. Later I explain what are these lines. So you understand that on the 15 minute we will use the daily. So this is for 1 day. So you see that for today we have the value area high, value area low, and POC. And if the price comes into this zone, we are looking for buy, or into this zone. Okay, and let's go on the euro US dollar, and we have to choose the futures. Let's see on the weekly time frame first. So what is it showing on the weekly time frame? Let it load. Okay, so you see that these are the weekly candles. So the market took the support from the weekly value area low and traveled until point of control, and this value area is basically previous year's 70% volume, and that 70% volume, this area POC is within that 70% the highest volume. Okay, and once we are above the POC, then we are looking for buy until value area high, and you see that we are until now we are going higher. So this is the point what we are looking for. You see that this, when we reach there, then we are a seller, and once we cleared, we are a buyer. So think about it, from here 1 2 3 weeks you are continuously on the buy side. You don't need to catch every move, just a few moves can make your years, or even at least make your month. So this is actually the 3 weeks price action. And look here, from 1 2 3 4 5 weeks you are continuously sitting on the buy side, from value area low to point of control. And later we will see that, of course, how to enter into the trades, but I'm just showing you how this thing works. So let's see on the daily versus what, the monthly. So okay, good. So this is the August month. So this value area is for the July, from here to here, which is plotted here. And you see that we are above the value area high, and we are getting the support from value area high. So 1 2 3 continuously 3 days we are sitting on the buy side. Look here, when the price came back at the point of control, then we are looking for buy. And when the price came down at the value area low, this full week we are looking for sell. This is a full week, and then we are at the value area, I mean the point of control, then again selling, and then from the value area again, and then settle down here. So same here, this is the value area high. Okay, and this is the point of control. And from the weekly time frame we check hourly versus weekly time frame. So let's see on the weekly time frame what is it doing. Look here, this is the previous week's value area plotted into this week. So you see that today the price is hovering at the point of control, and then it just came down at the point of control, and then just reached to the value area high. Okay, and this whole week the price never visited the value area, and this was the extended actually. And this week, you see, from the POC to the value area high, then value area low, then rejection from the value area low, then cleared the value area low and reached to the POC, rejected, and then value area low, rejected again. Okay, and this is how you can check on the weekly, and then we check for today's price action. So today's price action means yesterday's value area to plot today. So this value area is yesterday's price action. So you see that we got the first bounce off of value area high, and then from the, you see that we have the POC and value area, these prices are really close, so this can become a zone. And then from here we are looking for the confirmation entries. And look here, on this day, is yesterday, we are rejected from the POC, again rejected, and then we cleared, came back, and then we are at the POC, then again at the POC and value area low. So in this case, if they are really close, you can make a zone, something like this. And then whenever the price comes into this zone, we are looking for buy. But if the zone is something like this and this, we will not make this a zone, because this is really big from there to here. Okay. And there is another thing. If you see the lines, like these lines, so these lines are called the virgin point of control, VPOC. VPOC means virgin point of control. What is the virgin point of control? Virgin point of control is, if this is a value area and price opened somewhere here and never came to test the POC during the whole day, and the day finished. Or it's not only day, it could be the week also, the week finished. Or not only the week, it could be the month finished. Or not only the month, it could be the year finished. So whenever the period finished, then, and price never tested the point of control, it means this point of control is virgin. So this will just extend with the price. So let's say the price is here, it will extend until here. The price is here, it will extend until here. And at some point, it will be like this. And then it will stop plotting. Why? Because it's no more virgin. So we will say this is just the point of control, and this is where we are looking for buy. Okay. And of course, we will not buy directly from this area, though this is the highest volume ledge, but we will not buy directly from here. We will wait for the confirmation entry. But if the price opened here and goes here, of course we are looking for sell. Okay. And now I show you the virgin point of control. Let's go on the daily time frame first. Look here, this is the month. Can you see this month? The opened here and price never tested the point of control. So that's why this point of control become virgin. And now this point of control is extending with the price until it tests. And from there 2 days we have selling. And if the price took this one, then this turned into what? Look here. The price went higher and then rejected again. And then you can we are still seller, because this was into the order pairing. Okay. And this bar, I think 100% it will be something like this. On the lower time frame, the price came down and then tested this virgin point of control. Now it's not virgin anymore, and then sell off. Okay. And similarly, you can see that this is the whole month the price never tested the virgin point of control, and then tested here, and then we are a seller. Can you see how many days we are a seller? And then this is just the 1 day virgin, and then you see that the price opened here and the month closed here, then the next month started, and this POC become virgin. In this case, this virgin point of control was extending until price, and from here we are looking for buy. So you understand, this turned into the order pairing and then turned into the spot again and then buying. Okay, and not only the works on the daily time frame, let's go on the weekly time frame. So weekly time frame is what? I mean the week time frame is 1 hour, but the weekly value area. So you can see that this one is virgin, this one is still virgin, and this one is virgin. So if the price comes into this one, we are looking for sell, and this virgin is coming from where? Coming from here. If you notice that the week started here and never tested this one, so this one is just going with the price until it tests at some point. And similarly, you can see that this was the virgin, from here the price came, this was the virgin, and you don't need to see the small one, just see here, this is the virgin, this one is the virgin, right? This one was the virgin, this one was the virgin. Okay, and I will tell you that in some future videos, like how to use them. There are so many times when this virgin point of control turns into order pairing, and then once it comes back, we are looking for sell until here. Okay, and this turns into order pairing. If you see that many, they turns into order pairing, like this one, like this one, like this one, turned into order pairing on the 1 hour versus 4 hour. On the 4 hour it will be the order pairing. Okay, so if you go on the 15-minute time frame, you will see the same, the virgin point of control. Look here, you see you have the virgin point of control, and they also have the confluence, almost confluence with what? The value area high. So make it a zone, and then is a sell. Okay, and you see that these are all virgin point of controls. And if you want to learn more about this, then better you check this guy, market webs. And like I said, everything can lie, but volume can never lie, because volume can never be hidden. It has to plot somewhere. So this is all about the volume based. It's not something like the level, we have the high, we have the low, and this is a support or resistance or something. It's not like this. So it means that these three lines and this zone have the 70% volume traded yesterday, which is plotted here. And out of 70%, the highest volume yesterday plotted into this price. It means volume plotted into this price means what? This is the area of interest for the most of the big players. Why they are doing, or why they are having a huge volume into one price, a specific price, 70% of. So you can say that 70% volume of the previous day, and out of this 70% of this value area, and 70% is trading into here. So you understand how important the point of control is. This is the 70% of yesterday, and this is the 70% of this zone. Okay, so this area is very, very important, based on the volume. Okay, if you have any question, you can ask me. Thank you.